Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, April 11th, roughly 10 minutes after market close here in Jacksonville, Florida, 4:09 p.m. Eastern Time. And in today's video, we're going to talk about what a difference a week can make, particularly in relation to big tech and large cap growth stocks, a lot of which were really strong last Monday and following last Monday have had awful price action. And we're going to break that down a little bit, look at the actual numbers over the last 4 or 5 trading days to put some context with that. Additionally, we're going to look at some of the strongest acting stocks and sectors today, as well as some of the worst acting. So we're going to go ahead and get into it. It was a poor day in the markets, as you can see here. Big tech very weak. QQQ leads the markets lower. Performance-wise, there is no green on the screen, as you can see. So everything down today for the most part, with the exception of a few sectors and areas in the market. But G6 down 1.24, S&P down about 1.7, QQQ down around 2.4, Dow down 1.2, mid and small showing some relative strength today, but I wouldn't put much weight into that. But for what it's worth, they did show some relative strength today. We're going to talk about mid cap growth and small cap growth showing a little bit of relative strength against or versus large cap growth here in just a moment as well. I think it's an interesting observation over the last few days, but nonetheless, mid caps down 0.4, Russell 2000 down 0.7, 60/40 down 1.07, and grow down slightly over 0.5%. So just an all-around poor day in the market. And to make things worse, we closed right at the lows of the day. So with that being said, we actually have some changes to the trend gauge. But before I get to that, market state still uptrend under caution. That could be subject to change very quickly. We are not looking so great. We're beginning to break back through those moving averages that, like we've talked about on the tail of the tape with the bear case. So we'll get into that in a little more detail in just a moment. But quickly here, market leaders and short term both have a red arrow pointing towards bearish now. Last Friday, they had the little black neutral arrow right here with the action today in a lot of stocks, as well as just relative to the 21 EMA. That has been moved over pointing towards bearish. So leaning more towards bearish on the market leaders and short term. We also moved the medium term here from bullish or up to neutral today as we broke back below the 50 on the Qs. We're living below the 50 on IWM and MDY. DIA and the Dow on the S&P are still trying to cling to the 50, but it is very close. And then long term remains the same, still pointed towards bearish, but here neutral. So when I say what a difference a week can make, this is some evidence here for you. Look at when these were changed, 4.8, 4.8, 4.11. So the trend gauge reflective of some of the poor price action we've seen over the last 4 or 5 days. Moving forward here, I'm going to highlight Revere for just a quick moment, and then we're going to get into the tail of the tape as well as the stock. So before we get to the tail of the tape, like I usually do, let me highlight myself here and my email. If you have any questions, just send me an email. If you want to know more about what I'm talking about, you have a question about an ETF, whatever the case is, just send me an email and I'll happily respond, answer your question. If you're interested in what Revere does, what our strategy is, what our approach is, what we do as a business, whatever it is, just send me an email, or Dan, Don, Tim, or Merrill at revereasset.com as well. So let's get into the tail of the tape here. So we go through this every time, but headwinds remain the same. Interest rates really coming into focus as they have been just on a vertical move upward over the last couple of weeks here. Sentiment wise, we saw a spike up in a bad way on a lot of these sentiment things here. So VIX spiking up about 15% today, back above 24. Put call ratio got up to close to 1.1 today, finished around 1.02. But seeing these two show some evidence of fear, as well as just bad price action in the market. Fear greed just down a tiny little bit, still in that mild fear range. As I mentioned, some of the bear case constituents or parts of what we were looking for here beginning to come true. As we've noted here, this is in progress. The S&P breaking back below the 21 and the 8, more or less closing right on the 50 today. The Q's back below the 50. So the bear case is starting to potentially play out. And that's something you've got to pay attention to here. News-wise, we have Musk declining to join the Twitter board, which initially was thought to be a bad thing for Twitter stock. However, it ended up being okay as Twitter ended up being positive today, actually. So CPI, that is tomorrow. That's something that's going to come out in the morning. Will certainly probably have an impact on the market. So what were we watching today? What will we do into the 200-day as well as these levels here, 44.50, and you can see we broke below both, pretty much finished right around 4,400 today. And then same thing on the Qs, we gapped down below the 50 and really didn't look back. So not much positive on the watch component here. Action wise, opened down 0.7 on the S&P, early fade, consolidated near the lows, tried to attempt a bounce near the end of the day, and it really got shut down quickly, and we closed near the lows of the day. So pretty much about as poor of action as you could ask for across the board on the S&P and the Qs. Notes wise, QQQ and Apple below the 50-day. Large cap growth / big tech continues to lag, and we're going to look at that in more detail in just a moment. Performance wise, S&P opened down 0.7, closed down 1.7, G6 down 1.24, and 60/40 down 1.07, grow down 0.53. Sector wise, a lot of these that were green ended up coming in a lot at the end of the day, maybe just closing barely green as the markets finished very poorly. But regional banks, KBE here, aerospace and defense, home builders, transportation, cybersecurity, and retail, kind of a weird mix of groups to be positive on a bad day in the markets. But oil's really getting hit hard today. Technology, semiconductors continue to be the whipping boy. Shippers and biotechs really weak today. So like I said, kind of weird action in the sense of what sectors were doing well and which ones weren't today. But nonetheless, just pretty poor action across the board. Portfolio wise, we did trim a little bit, trimmed Apple and Costco, took gains on Costco, small loss on Apple. But beta now 0.44 to a 0.35. And the bottom line, I've said this a couple of times, awful price action, big tech being distributed. There's no way to get around it. Names like NVIDIA and Tesla, Microsoft having really tough days today and really tough finishes to the week last week. So moving along here, you see 411, 411, 411 right here. We broke bottom of the range, broke below all of these, right? So we were trying to hold on and cling to this 4,500. You can see we closed just under it on Friday, but that was not the case today. We come in, we gap down, and we really don't make any legitimate attempt to move higher as the day wears on. So you can see the 21 EMA has now rolled over close to 44.77-ish. The 50 is almost kind of flat now. It's rising to flat, but 44.27 kind of stuck right there. And you can see we ended up getting just slightly below those on the S&P today. So although it was just marginal, we did end up closing slightly below the 50 on the S&P. And these are your prior support levels here. So now we're sitting at 4,400. You see this 42.90 there below a prior support level. So that's something to keep in mind. We're going to go ahead and pull up the S&P chart so we can look at this with some context here. So let's get that pulled up. We'll get this out of here, and we will go to the S&P right now. So S&P 500 does end up closing below the 50-day today. As you can see here, now this might be a minute or two behind. It shows 44.09 as the last, but we closed at 44.12. So you can see just bad price action at the bottom of the range, closing at the bottom of the range. Not necessarily what you want to see here. From a bull case, what you'd be looking for is a quick reclaim of the 50-day and a quick reclaim of all of these moving averages up here. But that would require about a 2 to 3% move up for the S&P to get back above 4,500 and get back above these key moving averages. So bull case, that's what you're looking for. Bear case is starting to play out. You don't want to see the lows of today broken. If we come into tomorrow, you get another gap down. That's especially not good. So really just poor action since this day here, since we basically topped on a short-term basis on 329. Really has not been great price action since then. So moving along here to the Qs, which look much worse than the S&P, well below its 50-day. As you can see, basically closed on it on Friday, major gap down below it today, now about 2.5% below the 50. Same kind of story. If you're from a bull case perspective, you're looking for this to make a quick move back up, get back above 350 and reclaim these key moving averages. Again, you're probably going to need about a 3 to 4% up move to accomplish that here on the Qs. So not good action for big tech, and I think that's easily reflected here in the chart of QQQ. DIA did manage to close above, or right on the 50, excuse me. 343.85 is the level. It closed at 343.30, so just below it by a slight little bit. Right there into the close, ended up getting just slightly below it. Not the action you want to see here out of the Dow, which was acting much better than the other major indices up until the end of today. And then I mentioned mid caps and small caps hanging in there, showing a little bit of relative strength, but you got to take that with a grain of salt because they're just really just kind of consolidating in no man's land here below these key moving averages. On mid caps and small caps, I'd watch this low here. This is MDY. The low of 4.7 is 470.93. And then on IWM, already below that low, and you can see here just in no man's land, similar to MDY, below those major moving averages. Same concept for IWM and MDY from a bull case. You'd want to see a quick 3 to 4% move back up to strongly recapture these moving averages that are now beginning to angle down. However, you can clearly see the 80 EMA angling down, the 21 EMA also angling down, and that goes for pretty much all of the indices. So let's get into stocks, but before we do that, I do want to show TNX, and I want to show what I mean by a vertical move in rates. So basically, since March 7th, we've gone from 1.7% here on the 10-year note to 2.8% today. So almost a 1.2 or a 1% increase roughly over the last month in the 10-year note, which has a big ripple effect across all kinds of asset classes, yields, and things of that nature. We talked about that, but this is a parabolic vertical move here on the 10-year note, and that certainly is impacting stocks. So let's get into what actually looked good today. I think we spent enough time talking about what looks bad, and then we're going to get into the weakness in big tech in here in just a moment. So Lockheed Martin, as I mentioned, a lot of these ended up coming back in that were actually positive because of the market closing near the lows, but Lockheed Martin slightly green. Defense stocks showing some strength today. Another name in the space that was acting well today, RTX, but again, ended up coming back in a little bit off the highs here. Nonetheless, though, this is a constructive chart, and they pretty much hung in there and showed relative strength all day. A lot of areas did not end up being able to maintain their relative strength as the day wore on. Steel stocks like Nucor and Steel Dynamics showing some nice action today, both up around 1 to 2%, but nice healthy consolidations to the 21, it looks like here on a lot of these steel stocks. And CCJ, which was added into the 21 over 21 last week, up about 1%, which is especially impressive because the uranium ETFs themselves were down about 1%. So showing some big time relative strength versus the ETF for its space. Ulta, another that was showing relative strength. You see a lot of these ended up closing near the bottoms half of their range or so, but a RS line blue dot here on Ulta showing some relative strength as some of this more defensive stuff has acted better. John Deere also showing relative strength by being basically flat, came back in, but relative to the market acting okay today. Couple more here. PanW, as we mentioned, cybersecurity was a strong area today. PanW up about 0.5%, bouncing off the 21 EMA. Moving along here to the last couple of things, I'm going to show you the sectors here that were actually acting well today. So here's aerospace and defense. We also had home builders up today after just getting brutally demolished over the course of the last few weeks, as well as since the beginning of the year. And we had KBE, the bank ETF, also green today. But again, a lot of these have been demolished over the last couple of days, weeks. So you have to take that with a grain of salt. But what I do want to show you is the fact that mid-cap growth was only down about 0.5% today. Small cap growth, we'll use IWO, that's what's in the G6 calculation, down about 0.75%. But large cap growth down nearly 3% today, as you can see here. So a little bit of a disparity over the last few days. Large cap growth significantly underperforming relative to mid cap growth and small cap growth. So for what it's worth, we're seeing those smaller cap growth and the mid cap growth show a little bit of relative strength versus large cap over the last 2 days. Could be nothing, could be a flash in the pan, could be garbage bounces on some of this stuff that's been destroyed. But that's my job, is to present the information. That's something that's been sticking out to me the last couple of days. So with that being said, let's get into what was bad. We're going to talk about big tech in a little bit of detail here. So BITO This is not big tech, but I just want to highlight that Bitcoin has really given up the ghost in a lot of ways. We wanted to see this hold up around here, and you can see that it looked like it was going to in this range, and then you get hit with the gap downs, and now this is not looking great either. Bitcoin, I believe, now around 39 to 40K range, so giving up that big strong move up to the 45, 48-ish K range that it had a couple of weeks ago. So Bitcoin not acting great. And now let's talk about big tech, and we're going to look at these charts, and then we're going to look at a comparison. So Tesla down about 5% today. You can see from this day here, this is last Monday. Talk about what a difference a week can make. This is last Monday, Tesla up 5.6% on above average volume, within 5% or less of all-time highs. Get a nasty reversal, and all of a sudden you're down almost 20% from this day here. So from last Monday's close, you got Tesla down what appears to be close to 15 or 20%. Moving along here, NVIDIA down about 20% from last Monday's close. Here's NVIDIA last Monday. Looks like it was somewhat bouncing off the 21 back above the 8, and then just absolutely falling off a cliff from 275 to 220. That is a 20% decline roughly there on NVIDIA in the last 5 trading days. Microsoft, as you can see here, here's last Monday, above the major moving averages right here. As you can see, up 1.8%, above the 8, looks like a pretty clean bounce, and then you get, starting here, it just falls down a little bit. And now the Microsofts, the Apples, and the Googles are a little bit more in line with the Qs, but Microsoft down about 8 or 9% since last Monday's close. Google down about 11% since last Monday's close right here. The high of 28.74, that's basically right around where it closed at. And then today, here we are at 25.80, 25.75, back below all the major moving averages. So this is a recurring theme here as I'm showing you. And I just want to point out that although these looked fine, if you take these 5 days out here, you go back to Monday, these look good, but things can change very quickly. And we're certainly seeing these big tech names underperform other areas of the market too. So certainly some distribution going on in a lot of these big tech names. Moving along here to another area that's been just absolutely decimated, shippers. This is ZIM, which was a big time leader in this space, ran up here to 80, and subsequently over the last 2 weeks has pulled back to 55. So a pretty nasty pullback in this name, as well as the other names. SBLK, this is one of those shipper names, down 10% today. DAC, another shipper name, similar story, just falling off a cliff here. So these shippers, which were kind of benefiting from the inflation play and that type of stuff, really taking it on the chin the last couple of weeks. And lastly, we'll review the bad sectors from today. Oil, just bad out of the gate. Really didn't see a ton of positive action or bounce in the oil space today, but it is a sector that is subject to a lot of gap up and gap down. So just something to be aware of when you're trading these or owning these. We also saw the culprits from last week, XLK, XLY, act really bad today. All of these look very similar to the charts I just showed you of big tech. And then we also had XLB down a pretty decent bit today, right to the ADMA, but this was the top performing sector ETF last week of all sectors. So maybe somewhat normal to be a little bit of a give back here, but nonetheless, pretty sharp pullback for XLB today, which is owned in Grotection. And then lastly, XBI, biotechs, as we mentioned, breaking down a little bit, even though it looked like it was starting to form an uptrend, breaking down below the 50, not looking so great for biotechs either. So plenty to choose from the bad side of things, very limited to choose from on the good side of things. Places like fertilizers and steel, defense stocks, that's kind of where you have to play at the moment. But the market is not being your friend, no matter what you're owning. Never helps when the S&P and the Qs and everything else is being a drag on those stocks. So that is going to wrap up the video today. I hope it was insightful, valuable. Please just email me if you have any questions, and I will see you guys on Thursday's video and the podcast this week. Have a great week, everybody.